Hello, everyone. Welcome back to Everything Money Channel. We're happy you've joined us. Today, we're talking about CACI. This is an information technology company. We're going to go over the ins and outs using our 8 pillars, look at the health of the company. This is requested off our Patreon line. I welcome in, as always, my dear friend and lover, Paul Gabriel. How are you, my friend?
Hi. Heinz Finds what's that from?
We're also
Cool
here
Runnings.
with Trader Cool Runnings.
Is that Cool Runnings?
Yeah.
We're also here.
Feel the rhythm.
That was good, Mo.
Feel the ride. I thought it was.
We're also
no,
here-
it's not from Cool
Yeah,
Runnings.
it was that. What is that? Is that German? There's a German bobsled team that was
That's not what
doing
they
it.
said. They said.
They did when they were counting to go.
No,
Can
what
we
they say?
please get on track
No,
with
we
CACI?
cannot. This is important.
Okay, this is why you're here for this ever vigilant, which is funny. That's the ever vigilant is their slogan. CACI. I'm here with Trader Mo. Welcome in,
guys.
Trader Mo.
Thank you.
You've gotten this request on your morning show.
Yeah.
What is with this company that you know of?
I don't know. I guess we're gonna find out.
This is a international, multinational professional services and info tech company headquarters in Virginia. They service many branches of the federal government, including defense, home security, intelligence, and healthcare. Paul, they have 23,000 employees.
Come on.
Wow.
And they were founded in 1962 in California. Let's take a look at the ticker symbol CACI. Go ahead, Paul.
So some of the things I want to go over. I'm going to change our opening a little bit, guys. We talk about momentum a little bit on the show, and Mo talks about it for chart reading. So with this Everything Money app right here, which you get if you're a Patreon member, more on that later at the end of the show to understand how to get this for literally pennies a day, and that's not an exaggeration. Right now, the stock is trading above all of its moving averages. There's a lot of momentum going here. 25-day, 50-day, 100-day, 200-day, 300-day moving average. It is above all of these right now. That is big momentum in the stock. So if you're a momentum trader, typically you want to buy at crossings. But it's just telling you right now, Mo calls some things a power stock. I don't think this qualifies, but this has a lot of momentum going for it right now. It's a $6 billion company. Revenue right here, net income of $374 million, which gives it a PE of 16.6, was a check mark because the first pillar is a PE under 20. It's got a profit margin of 6.36%. That's an X, unfortunately.
I want that at 10.
We're looking for 10, but this will be changing soon because I don't think these are the best pillars to have. Last year's free cash flow. Now, I like this. $600 million in the last year of free cash flow. Right below it, we show the 5-year average of 383. So it's higher than the 5-year average, which shows it's probably increasing. I have not looked to verify this. We'll check that out in a few minutes. But this is a good positive sign. I like companies that have increasing cash flow. No dividend. And one thing I don't like here, guys, is a metric that I think I'm going to make a pillar is return on invested capital. This basically tells me how good are they at investing their own money to make money. They're only getting a 5.2% return. The market overall should do about 10%. I'm looking for 15. So it is below here. And book value growth is about 10% a year. We have to change this into percentages. This website is still in beta mode. It'll be coming out on April 15th for free for all Patreon users. So far we have 1 check on PE and 1 X on profit margin.
That was really sharp of you.
Did you like all that?
I mean, that was fast to go through. I mean, the numbers.
Did I speak too fast?
No, I mean, I know you don't like me to tell you to slow down, but it just shows what you're talking. You know what the heck you're talking about. Like me, I'm sitting here, have been for a couple years now, and I'm still like, good Lord, you know what you're talking about.
Oh, thank you, sir.
Pillar number 3 in our 8-pillar analysis is revenue growth over the past 5 years, Paul.
I love this. 4.22 to 5.89 check mark. But even more so, guys, look at the last 10 years. I mean, I just lied. It actually went down for the first 5. But for the last 5 years, they've really rebounded and they're going up. I thought it was higher. Hated it.
Pillar number 4 is profit growth over the past 5 years.
156 to 374. Check mark there.
Good stuff there. How about shares outstanding? This is pillar number 5. We want this number going down.
Oh, it's going up.
Uh-oh.
24.39 up to 25.23. That's an X. It's not by much. It could be fully explainable. You want shares decreasing, especially on undervalued companies. If they're overvalued companies, you're okay with them issuing more shares. But just in general, I like to pay attention to the shares outstanding. It shows me what the management thinks of the company itself, and if they're looking at their shareholders. Because if shares are outstanding, you as a shareholder are getting less and less of the company as time goes on. Now, here's the good news, Seth. 2011, they had 26.45 million shares. Now they have 25.23.
Okay.
So they're down over the last 10 years. Next.
Pillar number 6 is the current assets over current liabilities. This is cash on hand
$1 billion cash on hand.
minus
$772 million. Check mark there. Total cash flow. Now, guys, this is where I start to brag. I mean, this is just unfair to everybody.
Right?
It's just unfair how easy I make this for you. Free cash flow is cash from operations minus capital expenditures. This is the money they're going to use to pay dividends, buy back shares, make acquisitions, pay down extra debt, etc. I prefer it to the PE ratio, which is why to earnings, because earnings have SEC regulations, accounting regulations in there. I don't like that. I like the cash in and cash out of the business to see what I have to work with.
So our new viewers, Paul, again, if I'm seeing this for the first time, this is flying at me pretty fast.
Yes.
So why are you going in so depth? Why are we doing these 8 pillars? Why are we looking at free cash flow as opposed to just looking at a trending stock price? Go over it for me one more time.
So on I never look at the price of the company. I look at the market cap and and what I think the company is worth. When we look at the financials, it's to see where is the company going, how have they done in the past. It's us to sit there because when you buy a company, you're not buying just a share of stock. You're buying a piece of a business. You have to understand how is the business doing. Just like if you're to buy your neighbor's automotive garage. Wouldn't you ask for the financials the last 3 to 5 years? Would you ask for financials over the recession? Hey, how'd you do when there was a recession in 2008, 2009? You would ask these questions. It's no different than buying a stock. If you're willing to buy the neighborhood automotive shop or the neighborhood restaurant or any business locally, it's no different than buying a share of stock. You're buying a piece of a business. That's why we look in depth. And I'm not saying that there isn't a way to make money off momentum and only the pricing. Absolutely. And Trader Mo does the charts, and you'll hear from him in a minute. But I look at the fundamentals of a company from a long-term play when I do this. So this is the way I look at it. This software makes it easy. I have added a line. This is not actually a line in the cash flow statement. I've added free cash flow in here and shown the 5-year average, but it just shows the free cash flow year to year. But look at this. I mean, this has jumped up quite a bit, Seth. If you look,
nice growth.
207, 254, 271, 581, 600 for an average of 383. What was the market cap of the business?
$6 billion, Paul.
So right now, $6 billion on an average of 383.
This is looking pretty good, eh?
It is a check mark. And over the last year, it's 10 to 1. We would consider that the free cash flow multiple is $6 billion divided by last year's free cash flow, which is $600 million. It's 10 to 1. Anytime you can buy a good company that's growing at 10 times free cash flow, that's a major thumbs up. I will say this. I don't dislike the shares outstanding as much as I do right now, but still understand why they issued 4% more shares in the last 5 years. But it's not killing me here because make sure this free cash flow number is sustainable. That's your big job here. The 8 pillars are used to tell you a story and tell you what questions to ask next. This is my question. Why did free cash flow, look at how consistent free cash flow was over these years, and then all of a sudden it doubled. We gotta understand why. Was there an acquisition made? I don't know. And by the way, that's something in the investing section I need to get added here, is the acquisitions and dispositions to see what they're doing in that area. So far, guys, we can go to a recap page on the Everything Money software, and look at this, kids. It tells you the full recap. And it tells you the ratio. So shares outstanding increased by 3.9%. Assets versus liabilities, everything here. Price to free cash flow was 16.24. Remember, that's on the last 5 years, and we're looking at the past 1 year was 600 million. So it's about 10 point something. So guys, my take on this one is do more research, but I like this company a lot.
We do get this, Paul, in our comments. I'm so new with this. I love what you're saying. I love the 8 pillars. We found one that we kind of like. What is your next step for a normal person? Not Paul Gabriel in this upper level. Normal person, what should we do?
To make it easzy,
Go on.
join Patreon, talk to all the members and say, guys, I found this company. What do we look at next? You will get so much response. But if you don't want to spend 50 cents a day to join an amazing group and get the software for free, your next step is go figure out if you think the growth and the current level of the company is sustainable. If it's sustainable, I think this is an absolute buy. If you believe this is sustainable, absolute buy. I'd buy the shares right now.
Let's head over to Trader Mo. This is exciting, Paul. This doesn't happen often on this show because we're finding those 20 to 30 beautiful companies you want to invest in. And let's head over to Trader Mo with the trading and momentum with CACI. Mo, what do you have on this company?
So the good thing about charts is that it tells a whole story. That's why I like to have these charts that's why I don't trade IPOs, because I want the entire story. So as we can see, we kind of just consolidate in this region within the moving averages. And those squiggly lines in there, these 4 lines right here, Those are the moving averages, 100, 200, 25, and 50 day. So the fact that we're kind of breaking out of that right now gives me a little bit of confidence that we can move higher, but just looking back a year, this is kind of that plateau point where it can't push through that level. But let's look at it from a long-term chart. This is a daily chart. That's more of if you're a swing trader. So right now we're coming through the sweet spot very nicely. This is exactly what we want. The only problem, the big problem that I'm seeing right now, if you wanted to add some shares, is you have a 50-cent bid and ask difference. We want that to be 1 to 2 cents, and this company is 247. I mean, you could probably go up to 3-cent bid and ask difference, but if you want to add shares, you need a good green engulfing candlestick out like that, and then you can go on your merry way. But just know that you are going to be facing resistance at this point of $260 a share, something like that. So there's a little bit of room for you to work with.
If you're drawn to day trading, momentum trading, which usually has nothing to do with the company and more of the numbers, you can join the middle tier of our Patreon page, and you have access to Trader Mo and see all of his trades on a daily basis. You basically just talk to them, right?
Yeah, I mean, any trade that I make, you guys have, I update it live for you. So yeah, you get that.
Paul, are you still frothing at the mouth over CACI? You love this.
Yeah, I do like this. I'm going to be looking at it further after this. Probably even go to the Patreon and tell people, hey guys, we like CACI. What are we going to do here?
Yeah, good play. All right, guys, that's our pitch. Sure, Paul, show them what you got.
Guys,
briefly now, I love you.
Remember, we have created this website. It used to be $14. Now it's $17 a month. It was $8 2 months ago. Look at all the things you get here. You get 10 years of financial data, stock value calculator, real estate calculator. Biggest thing here though, the Discord community channel, over 1,500 members currently. Here's our competition, 200 a month, 200 a month, 35 a month. You don't get everything. Guys.
This is absolutely unlike any other YouTube channel you're seeing out there. Most of them offer some sort of Discord, Patreon access where people are just talking. At the high end, some people are offering a single Zoom chat once a month. For ours, the value with this website, the Discord channel, the exclusive videos we're making for you, it's just incredible. And that is our Patreon, something we're most proud of.
And it's 50 cents a day, guys. Literally 50 cents a day. If you have even a $1,000 portfolio, you can do this. You're going to spend more money on coffee every single day, even if you don't buy Starbucks. So you're going to spend more money on coffee than this, and this is going to help you with your financial future. It makes no sense to me to not do it. Do it. This price is only going up. It'll go to $49 at some point. The question you have to ask yourself is, will you regret it when it's $49 and you could have had it for $17? That's the question.
That's our take on CACI. We will be doing more. Paul, I'm certain we'll talk about this in the future. What an interesting stock.
Absolutely.
Make sure you guys tickle the thumbs up on the way out. We love you. Thanks for joining us. Everything Money, baby.